Thank you very much. I'm David Gerigano, Commissioner of Revenue. I've been with the department for about 27 years. I've been in my current role for about 7 of those. And we always really appreciate the opportunity to be invited to come out to speak with groups in various places across the state. You know, a big part of our role, probably the most visible role, is to collect state revenue. But I like to talk about the fact that we collect and work with all of the local governments across the state. We collect a lot of revenue for local governments, mostly in the form of local option sales tax, but also some other taxes. And when we do our strategic plan, 440 local governments are our customers, just like the state agencies and the taxpayers and vehicle owners are our customers. So we really appreciate the opportunity to come out and talk with you today. I would like to introduce, just briefly let you know about the folks who came with me, because if you interact with the Department of Revenue, these are really good people to know. Courtney Swim, has already been mentioned, is our Chief of Staff. Courtney is responsible for a number of areas. She's part of the this is our legislative team. She's part of our legislative team. She also oversees our research division, our policy division, our communications, and some other operations. And some of those are vital parts of the legislative process as well. Our research division are the folks who put the numbers together, not only for the estimation of state revenue for the next year, but also for our fiscal notes. And the policy division does a lot of research that informs state tax policy. And one of our main jobs is to give the policymakers the information they need that we have from being on the front line so that they can make the best possible decision. And then once they make that decision, like in this case, this bill was proposed by the administration, but ultimately the General Assembly decides, and once they make that decision, then it's back to the department to administer that. And that's what I really want to talk about today. But before I move on, we also have Logan Hess is our Director of Legislation, and Autumn Cole is our Legislative Liaison. They're the folks who are working with the members on a everyday basis during session and when we're not in session as well. But I'm glad you want to know about what this does, because that's what I'm most comfortable with, and I'm happy to talk about that today. So we get the biggest portion of our revenue, state revenue, from the sales and use tax by far. But F&E tax, as it's often referred to, is second to sales tax. And F&E stands for franchise and excise tax. And it's really 2 separate taxes that are administered together and collected from the same population of taxpayers. That population is made up of corporations, LLCs, limited liability partnerships, basically entities that enjoy liability protection for their owners. And franchise tax is, well, let me start with excise tax is on income, corporate income. The franchise tax is on the corporation's net worth, or the value of the corporation. And we're not really going to talk about excise tax today because it's not impacted by this bill. In fact, that's sort of one takeaway is this changes nothing about the corporate income tax, the excise tax. This is all about the franchise tax. So not only are there 2 taxes, F and E, but franchise tax has sort of traditionally been made up of 2 components. There is, it's fundamentally a tax on net worth, as I said. That's basically your book value, your balance sheet. Assets minus liabilities equals net worth. That's the base of the tax, generally. But ever since it was enacted in the 1930s, the early 30s, there's been an alternative minimum tax, if you will. Sometimes called the minimum measure. It's sometimes called the property measure. But what it basically says is you really owe tax on the greater of your net worth or the amount of property you have in the state of Tennessee. And that's real property, tangible property, all that property. So it's this 2-prong determination of the base of the franchise tax. And that's really what came to be at issue and what this bill addresses. But as far as what the bill does, it's really in essence, not that complicated. It eliminates the property measure. For tax years 2024 and forward, that has been deleted from the tax. There is no property measure, so that everybody's going to pay on net worth. There's a lot of policy reasons behind that. There are a lot of reasons in general behind this bill, but part of that are policy reasons. We are one of, if not the last state to have that type of property measure as part of their franchise tax. We're actually in the minority of states that have a franchise tax at all. But of those states that have a franchise tax, we're one of, if not the last one, to have a property measure component. So that's eliminated. What gets the most, and that's a big deal, right? From recruitment standpoint, from a taxpayer standpoint, that's a significant change that benefits taxpayers. But what's really gotten the attention on this bill more so than eliminating it going forward is that it also eliminates it for the open refund periods. It provides for, directs the department to issue franchise tax refunds to taxpayers that paid on property for the open period. So basically for 3 years back plus the 2023 period, which I'll talk about a little bit later. So our job now, and it's a pretty big undertaking, but we've spent time preparing for it. We feel like we're very ready, and we're now in the middle of it. Is to issue these refunds and make sure that the proper amount is refunded to the population that's eligible for the refund. And in conjunction with that, our task is to make that process as efficient and as easy for the taxpayer as we can, while making sure we refund the proper amount. So there's a balance there. Whatever we do to fulfill the requirements of the statute and to get these refunds out efficiently, we want to do that with great customer service. So whatever the process is, and I'm going to talk through that a little bit, we're available for folks. We're available on the phone. Our answer rates are consistently in the high 90%. You can talk to somebody at the Department of Revenue if you want to. We have a help desk on our website where you could submit a ticket, if you will, basically an email, and you'll get a prompt response if you'd rather do that. And we have, as I'm going to talk a little bit more, we have an extensive amount of information out on our website. We've created a page for this topic. There's a significant number of FAQs. There's a recording of a webinar that we presented. There's a technical notice. There are instructions on how to do everything that you need to do to get your refund. So we want to have excellent customer service throughout this process. But who is eligible? When we talk about these refunds, who gets these refunds? Well, as I said, it's pretty simple when you boil it down. It's anyone who, for the open refund periods, I'll get back to that, paid on their property as opposed to paying on net worth. There is no refund if you paid on net worth. You're already at the place that we're bringing everybody else to, so there's nothing to refund in that case. As far as the open periods, it's the standard refund period, which has been in place for a long time. You file your return, you have a certain amount of time. It's basically 3 years from the end of the year in which you filed that return to make changes to your return, make corrections, what have you, and get a refund. That's the standard refund period, and this legislation tracks that period. So in this case, not everybody's on a calendar year, but that's the easiest way to talk about it generally. If you think about a calendar year taxpayer, this would be for tax years 2020, 2021, 2022, and then 2023, which just ended and people are filing now, is the open refund period. We did send individual direct notice by mail, by letter, by physical letter, to the population of taxpayers who we identified as likely eligible for a refund. So we looked back at all the returns for the years I just mentioned. We looked at who filed and paid on on property measure. I may slip into saying Schedule G. On the return, property is Schedule G, net worth is Schedule F. So apologies if I slip into saying Schedule G. We looked at everybody who paid on property. We said these people appear to be eligible for a refund. We're going to contact them, and they would have gotten a letter. Now, does that mean that's 100% accurate all the time? We try to tell people, just because you get a letter doesn't automatically mean you're entitled to a refund, and just because you didn't get a letter doesn't automatically mean you're not entitled to a refund. We're encouraging everybody to look at their own filings, talk to their own tax professional if they need to, and make their own determination. But we feel like it's a pretty accurate, because it's based on actual returns filed and who filed on G. But ultimately, it's the taxpayer's responsibility to determine their eligibility. How much are they refunded? This was kind of a point it needs some clarification as we went through the process of this legislation. It's not everything they paid. It's the difference between what they paid on property and what they would have paid on net worth. And so we're basically changing the tax base from property to net worth, and it's the difference between the two is the refund amount. So in that case, as I said, not only going forward where everybody pay on net worth, regardless of how much property you have in Tennessee, but also for that those back refund periods, the outcome is everybody has paid on net worth once they get their refund. What about when all of this happens? The refunds must be filed between May 15th and November 30 of 2024. That's a statutory deadline. That has to be met. What do you have to do to meet that deadline and to make your claim? It's really a two-step process, and I'll spend a little bit of time talking about this. The first thing we need you to do is amend your returns that you filed for those years. The reason for that is goes back to what I was saying about we need to make sure we refund the correct amount. If someone has paid on Schedule G property, they may not have accurately completed their Schedule F on net worth. We know that from experience. We got sort of confirmation of that from tax practitioner community because they know they're paying on G. They know they're paying on property. They may have paid on property for 20 years. They know they're always going to pay on property. So they're not paying much attention to the Schedule F net worth amount. We need people, just as when they file their original return and they do that officially, they sign under penalty of perjury, they're telling us this is what we owe and you can rely on this information. We need them to do that with respect to their amended return so that we know that we are calculating and refunding the proper amount of tax. So there's a requirement to amend your return for the period. It takes a short amount of time for that to process. Typically, my folks in the divisions will say, don't say overnight, but lots of times it's done overnight. I think we're telling people give it, a couple of days just in case something happens. Sometimes a return has a technical issue and it suspends temporarily, and a human, has to look at it and process it on through. But either overnight or within a short period of time, that return will process and there'll be a credit on your account. And then you need to file a claim for refund form. And we've created a special refund form for this process. Please don't use the standard refund claim form that's out there. There's some very important reasons why it needed to be separate. Basically, I'll get to this a little bit later, but there's some requirements around waiving right to file suit, publication, and also this refund is being paid out of a special fund that's been set aside in the budget through the legislation. We don't want this coming out of current collections. We want this to be paid out of this special fund that's been set aside. That's what the legislation requires. And so all of those reasons are why we have a separate task-specific claim form that we need people to use so that we can track and process all of this separately from standard refund claims. We strongly encourage people to use what we refer to as TNTAP. That's the Tennessee Taxpayer Access Portal. That is our customer-facing software, our customer-facing part of our system. You can access all your accounts, get all the information, all the correspondence. You can file all your returns. You can do all of that through TNTAP. And we encourage you to do that. What you can do is you can go in, you can pull up the return that you're amending. As I said, a two-step process: amend and then claim the refund. You can pull up the return that you're amending. Let's say it's 2022. It'll all be populated for you. You simply go in to that Schedule G I talked about, enter 0 on that schedule, and click to resubmit. Click through and resubmit the return. When they demonstrated it to me, I literally, I counted the number of clicks, and it's a relatively small number of clicks to get all of that done. And then you let that process, and you go back in, you pull up the claim form, and it's pre-populated that for you too. It's calculated your refund, it's put all of it in, a few clicks that yes, I'm claiming a refund, I'm waiving my right to file suit, et cetera, a few clicks, and you're done with the claim for refund. So we think that's an efficient process. We've gotten really good feedback on that so far. You're not required to do that though. You don't want to box anyone into something that they're not comfortable with or for their own reasons is not what they prefer to do. So you can file your amended return in any of the ways that you file an original return. You can file it on paper if you need to. You can file it through your own, through a software vendor. You can do all of that. But we just really encourage people to look at the TNTAP option. Same with the claim for refund form. If necessary, you can submit that on paper. There's no prescribed legal requirement as long as you use the form for this purpose. But again, we think TNTAP's a really great way to go. Probably will speed up getting your refund, simply because paper has to come in, has to be processed, has to be manually keyed by an individual, those sorts of things. Few reminders of best practices. These are really written maybe more for tax preparers in mind. I don't know how many of those we have in this group, but quickly, as I said, the quickest route, and we think the most not only efficient but accurate route, is to use TNTAP. Please make sure your mailing address is correct in your F&E account, because that's where the check's going to go. These all are paper checks. That's the way the state does business, so they do come paper checks through the mail. Make sure you schedule out G. We've seen some folks who haven't, they'll zero out certain lines, but have missed zeroing out all of G. So it's just a reminder to preparers to make sure you do zero out all of that schedule. And we're really, every time we get a chance to speak, we're encouraging people not to wait till the deadline. We would really see, so how big is this population, right? Once we did the letters, we sent out about 120,000 individual letters to different companies. That's sort of the population of people that we believe are eligible for a refund. So we would really like to see people get ahead of it and not have all of those come in at the very end of the period. So you might ask, well, how's it going? We started getting the refunds in on May 15th. I'm pleased with the work that these guys did, and a lot of work across the department to have everything stood up. All of the external facing information was up, and the systems configuration that had to occur was all ready to go on May 15th. It was live, and we started receiving refund claims. It's going well so far. I would say we felt good because we had done a lot of planning and preparation, but I would say it's gone smoother than I, reasonably hoped for so far. Very, very few issues really almost none. No serious issues have come to my attention. If anybody in here has experienced otherwise, please let me know now or later. But really smooth so far. There's one main thing that we've been working on to improve, and so I'll try to walk through that a little bit. That's the 2023 year. So for 2020 through 2022, those returns all been filed. Those are the ones we look back at. For 2023, that year when the legislation passed, that year was over, right? We were in April of 2024. But a lot of the returns hadn't been filed at that time. A lot of them haven't been filed today because while for a calendar year taxpayer, the initial due date is April 15, you can extend. You can extend all the way out into November. So it's sort of this transition year. And for some of the reasons I described before, the requirement this be paid out of a special fund, the requirement in the legislation that the taxpayer, in order to, as a condition of receiving this refund on this issue, there's a waiver of the right to sue the state on this same issue. So that waiver has to be accomplished. And also, the legislation includes a provision that the recipient of the refund next June will publish, for a 1 month period, will publish a list of the recipients of the refunds, and they'll be categorized by broad amounts. So I think it's everything under $500? $750, thank you. Everything under $750, there'll be a list of taxpayers who received a refund of that amount. Not the specific amount, just this is the population that received a refund of less than $750. Between $750 and $10,000, if that's the refund amount, again, we're not publishing the specific amount, just the taxpayer falls into that category, and then above $10,000. So for all those reasons, we need to issue a refund to the people who are filing for 2023, and not have them file as if the law had already changed that year, because the law clearly changed for 2024 and going forward. The old law applies to 2023, but you're also due a refund. So our initial information, and what's actually on our website today, says, please file your return in 2023 if you haven't already. Some people have, obviously some haven't. And then amend it and ask for a refund. That clearly has sort of a feel of, why do I have to file and then amend? Why do I have to have two filings and potentially pay and then get a refund? So we've been aware of that. That was the process because we needed it to be able to meet all the requirements of the statute. But we are on the cusp of rolling out an alternative, which we think is going to address a lot of those concerns and is going to be a better process. When you really boil it down, we need the final return to be without G. What we can use instead of an original return that has G and an amended return that that eliminates G, and comparing the two, what we can do instead is take an original return that does not include G if we get a pro forma G and a refund claim form. So that's what we're getting ready to roll out in the next little bit. It's still something that has to be sent to us, but your return can be filed and your payment can be based on basically the calculation without G. But I want to emphasize it's absolutely critical though that we get the pro forma G. And pro forma, if you don't practice in this area, I just mean it's the same Schedule G, but you're not officially filing it as part of your return. You're just giving us basically an informational version of that schedule. So we have to have the pro forma, and we absolutely have to have the refund claim form, because the refund claim, both of those things are what's required to meet the requirements and to do so before November 30 deadline. We can't accept any of this stuff after the deadline ends. So we hope that'll be better for folks and well received, and it's not out there yet, but it's coming, and we're going to be corresponding with everybody who hasn't filed or a small population that filed without G, that based on their filing history we think probably should have used G. We're going to be sending out correspondence through the mail, paper, the whole thing to those folks in the not too distant future. Just lastly, touch again on those resources. Please look at our website. On the front of our page, we got the tiles that kind of scroll. Look for Schedule G refund. Click on that page. You'll find all the information. Customer service, we have a direct line, that 253-0700. That goes to our F&E tax, what we call the tax practitioner hotline. They're really our F&E experts. It's a smaller subset of our call center. And then you can also email directly to the audit division, the folks who are processing the refunds themselves. I really appreciate it. It's great to be with y'all today. And if you need anything, please reach out to us.